All right, so welcome into the live stream today. We're going to be jumping into Bitcoin. The markets are crashing. What is happening out there? And really a breakdown of everything we'll be taking a look at today, including maybe a silver lining that is in it where banks might be looking to go into the exchange business. We're going to break all that down for you guys. My name is Paul Barron. Welcome back into TechPath. Let's dive into it first. I want to thank our sponsors, of course, and that is Capital. If you're looking at long-term hodling, whether it's Bitcoin or some of the other assets that they put out on the crypto IRA platform, it is a great place to look at preparing not only for the end of year if you're looking at tax positions, but also if you're looking at a long-term play with a certain portion of your assets. This is one of those tools that I use on an ongoing basis, and it is one that we love here on the network. Of course, all you have to do is click the link below. If you sign up, there's two ways to do it. You can sign up without actually initiating a funding. You can start learning about the program. And then once you actually initiate funding, you can get a $100 funding reward right there to your account. So check them out. You guys are going to love that. Also, this week, big news is our ETH week coverage is going to be pretty cool. We've got a lot of, as you guys have probably been seeing, we've a lot of guests coming on the network. And then additionally coming on the network, we are going to have the Bankless team coming on, as well as Rand from Crypto Banner will be joining us this week as well. And then we have some special guests that will be lined up as well throughout this week through the merge, obviously, here in the next day or two. It's going to be a big, big group, really giving insights and information around where the market is trending and really what the post-merge environment might look like. So I'm really excited about talking to these guys for sure. All right, so there's a lot happening right now. 290 million in Bitcoin and crypto liquidated as inflation data pummels the markets. This is an issue I think that we are going to be faced with. I think a lot of people were a little bit faked out by the CPI data that came in and the precursor of data that was being released yesterday and the day before. There were some indicators out there that CPI was going to soften, but the reality is that the core CPI, the core inflation numbers, were actually still accelerating. And this is a problem because it will continue to put pressure on the Fed to continue its rate hike bonanza. And I think that's going to be the bigger question here. And the markets, I think, are now responding. We'll take a look at some charts here a little bit later in the video today, but make sure and hit the like button, because if you do want to take a look at those, that's how I get an idea of whether or not we should jump to charts and really do some price breakdowns, give you guys some insights there. A couple other things that kind of play into this. One area that I'm watching is just some of the overall analysts that are out there that are kind of taking a look at the current situation of where inflation really is. This is Heather Long. And Heather Long is, of course, right over there at the Washington Post. And she goes into a lot of economic data, but really does a good job, I think, on Twitter and on putting out some information. But anyway, food at home up 13.5% in the past year, largest since 1979. Rent is up 6.7% in the past year, largest since 1986. Electricity is the big one, obviously, since 1981. Remember what happened back in 1981? Still one of the worst, really the worst recessions we've had in modern era. And it was a period in time in which we saw really high double-digit inflation, which is going to be interesting. And then health insurance, 24.3%, largest ever overall in terms of cost, and why Americans are still seeing a lot of these cost things or costs that are really causing a lot of pain in the market. And of course, that is starting to trickle down into decisions around buying and or doing something that really kind of stimulates the economy and in the essence of how money is essentially going into it. So I think this is a factor that will start to really go into some of these pre-market scenarios. The other thing that could play into this that I'm a little bit cautious about, there are some people that are starting to already talk about this, and that is that the Fed is fighting inflation, obviously, but it could deflation actually be the next battle. There's a few people that are kind of sounding the alarms here. I want to kind of pull up a few statements right here. Good news for cash-strapped consumers, but a drop in prices isn't causing everyone on Wall Street to cheer. Some are starting to use the D word in terms of deflation. This may sound like a good thing, but this is a big cause for concern. Obviously, the two biggest names on Wall Street saying that this is a big concern is Elon Musk. You've got him going here, and he's really coming in saying this could have some major impacts. And right after he came out, ARK Invest CEO Cathie Wood also warned about deflation on Wednesday. And the Fed is basing monetary policy decision on lagging indicators, employment, and core inflation. This is the factor that we talk about here on the show a lot, and really kind of looking at what the Fed will be doing at the end of this month, because FOMC is going to be a big part of whether or not we're going to see rates go up and to what level. That, of course, will have quite a bit of an initial effect on not only Bitcoin and Ethereum, but I think the overall altcoin market will be coming in there as well. So there's going to be a lot happening for sure. It is a scenario right now that I think a lot of people are looking at. All right, well, CPI came slightly down. Why are we seeing the crypto markets tanking? Obviously, now you understand prices are not slowing at the pace in which the Fed really wants it to. Hence, this is a good precursor indicator of the data that Jay Powell was talking about at the Wyoming summit, where he was really kind of putting some pressure on the overall markets to pay attention. Listen, we think there's some lagging indicators here that are going to be quite suppressive in terms of an economic recovery. This is exactly what I was talking about a few weeks ago when he did that speech, is does he know something that maybe is not being conveyed out to the market yet? And I think this might be the smoking gun in the sense of we're seeing a lot more price controls that are not slowing at the pace in which they thought they would at this stage of interest rate correction and market suppression that the Fed has essentially put onto the market itself. So I think what we're about to see may be a little bit more carnage in the crypto markets for sure. And Bitcoin could be in an interesting place here after the merge. And there's some things here that I think play into this, that a lot of people are now starting to think, wait a minute, are we being set up here? Are the normies being set up here by the institution? Because this is a typical thing that happens in the securities markets. And it's always something that I'm watching in a big way to understand what are the institutions doing, how are they applying into this. So in some cases, like this market, it could be a silver lining. Now, hear me out on this, because there are a lot of moving parts here that could play into this in terms of a corrective measure or preparation. Remember, if you've been watching me for very long, you understand that we're watching for two things that are indicators. The first thing is we're always looking for, when is that bottom in? The bottom is in when we start to see the early stage institutional money start to be making chess moves. And that is a very key strategic time. Now, what happens is if you had a big bell curve or a big downtrend on your charts, it would be right around the bottom, and we would most likely still continue to see downward trends, but not for long. And the reason is they are pre-buying the market. So they're getting in at the deepest cuts potentially, maybe not the absolute bottom floor, but getting in at the absolute available deepest cuts and getting ready for a market rebound. And the same thing happens in real estate with interest rates, and the same things happens in securities with what some of the innovation stocks are doing in terms of prep. So I watch all of this very closely. One of the things that I'm watching right now was this move right here. And this was actually a move that was done back in June of this year. And this was, and follow along here because this is a very interesting component of how this is piecing together, I think, a very strategic play by institutional capital. So Citadel Securities, business head, this is Nazar Ali. He leaves over for a joint crypto venture with Virtu. Now, Virtu also lined up with a joint venture with a couple of other organizations of which you'll know. And interestingly enough, let me highlight this right here to give you guys kind of a little bit of an understanding. You got Charles Schwab in there, Fidelity Digital Assets, all tied into this joint venture. This was back in June, okay? So there were moves happening in June in preparation for what could be a new way in which digital assets would be managed and or acquired through some of these structured capital entities. And now what we're seeing is the news today that broke on CoinDesk. And this, of course, is Schwab Citadel Securities, Fidelity, and other Wall Street firms now starting a crypto exchange called EDX Markets. Now, many people would say, well, yeah, Paul, they're just running and they're trying to grab cash. At the same time, I look at it as now this is a very competitive play to compete with the majors. And I feel like the majors right now consist of Binance, FTX, and Coinbase. Those are essentially the ones that are seeing the most impact on what's happening right now. If we see a major trifecta here of someone like Fidelity, Citadel, and Schwab really coming together here, this could show a very interesting move toward not only the faith in digital assets, but the faith in lawmakers and regulators to actually be going in the direction, because these guys are not moving this direction just to put money out there. They understand something is going afoot. And I think that is the first play into this was back in June. And now here we are in September, showcasing the work that they have been doing. So here's the breakdown right here. The exchange will be led by, guess what? Nazarelli, former senior exec over at Citadel Securities. And then this is obviously Ken Griffin, their trading operation. Other high-profile EDX brokers include trading firm Virtu, which we talked about, and venture capital firm Sequoia Capital, and also Paradigm. So this is major money, and it's major institutional play from very strategic-based team. And when you look at the actual press release, let me see if I can pull it up here. Yeah, right here's the press release. So this is the press release by EDX. Let me zoom in on that for you guys so you get a little bit of understanding of what they're up to. So EDXM will enable highly liquid cryptocurrency ecosystem that, of course, aggregates liquidity, multiple market makers to reduce spreads and improve transparency. That sounds like something that is going after some of the problems that some of the existing markets have today. Commitment to price discovery and efficiency is expected to result in better prices for investors than those offered by existing cryptocurrency exchanges. So EDXM operates as a fully independent entity backed by financial industry leaders, Schwab, Citadel, and Fidelity, obviously with Paradigm and Sequoia. Leveraging a network of select digital custodians to safeguard assets, trades will be netted and settled on the blockchain for greater speed and efficiency. So typical customers, security and regulatory compliance, two key words here being used, are also the foundational principles for EDXM. They are going after the big boys, guys. This is a power play on the traditional securities exchanges and some of the biggest extended banks, in essence, that are out there in the market, playing into a positive move in which I always say, when the markets are at their weakest, look for the chess pieces to come onto the board. This is one of the first chess pieces that I think are going to start to show maybe we are nearing a true bottom. This is going to be interesting to watch for sure. Then you've got, of course, the fact that Fidelity is now rumored retail crypto plans now are in their job ads. So look at what they're highlighting right here. This was posted also in June at about the same time in which all of this started to break loose. Within Fidelity Digital Assets, the Wallet Blockchain Foundation's team is responsible for the back-end services and APIs that support digital asset transactions and networks such as Bitcoin, Ethereum, etc. The team will also lead tokenization efforts. Guys, this is getting real because we are getting into an era now where banks are truly starting to step in to a position. This is only going to start pushing the traditional banks. Remember, these are exchange securities, SIPC insured, even though they do have FDIC for their sweep accounts. There's a lot happening around what these guys are up to right now. And this is something that you're going to have to start watching very closely, because this is a scenario where we may start seeing a little bit of a tug of war in the exchanges themselves. Because remember, there's a lot of exchanges that have been out there for quite some time, but many of them were gobbled up in the early days by what we saw. The only one that really didn't go that direction, and I think there was a reason for it, was Robinhood. Robinhood had a very unique proposition, mainly to new investors, where Fidelity and what you're seeing with Citadel and even Schwab, they're going after the traditional investors that have a lot of liquid assets at play, and they're looking to move this into digital. That goes back to the thing we've talked about so many times before, and that is, of course, what we're talking about there is adoption. So very interesting stuff here for sure. And the point that I always make and am at the same time concerned with, and even to the extent that we've talked about this on the show before, is in many cases, a lot of these exchanges do not have federal deposit insurance, so FDIC. SPIC is where it is a securities exchange that is now getting a protection insurance within that. Interestingly enough, right here is the Fidelity's page on FDIC insurance and how they run it when you're using an FDIC cash balance. So much like what you hold in undeployed capital now has or has had and been available into what was or is the Fidelity FDIC insured deposit sweep program. So they're essentially running an extension into banks that they trust, much like what Voyager was trying to do, but Voyager never really got it done. Actually, this is happening right now within these SIPC insured exchanges. Hence, are they going to start transitioning that into some of these other organizations that they start to build up in the digital assets front? Going to be some very interesting moves, power plays in the coming months and coming years. Make sure and hit the like button. We do like to get your feedback on these. We will break into some charts for you guys to show you a little bit around pricing and where things are rolling that way. But additionally, and don't forget, put a comment and some questions in over on the sidebar. We'll try to get to as many of those as possible. We will be running a poll today as well. Don't forget, we're putting up the notifications on our ETH week. So all you have to do is hit those notify me buttons right there. Very easy to do. You'll see, I think we've got Bankless coming on tomorrow, and then Ran is coming on, and then we have a special guest coming on tomorrow as well. So cool stuff. Just hit your notify buttons, and that if you're subscribed, you'll be able to get those notifications. It's very easy. Just click that bell, and you'll be in nicely. Now, with all of that happening, you've got the markets crashing, obviously inflation running rampant. We've got a situation now with the macro scenario that will continue to put more pressure on Bitcoin and Ethereum. As we're talking right now, Bitcoin and Ethereum having some problems in the market in terms of its adjustment. Hopefully some of you guys sold at the 22K mark and made a move on those. But when you look at what's happening within the existing exchanges, you've got SBF apologizing for the FTX glitches amid high volatility. This, of course, is all being done around the merge itself. But the scenario was that the exchange itself prevented some users from accessing an account. So I didn't run into this. I use FTX, and I was doing a lot of active trading on it, and I didn't run into any problems, but I did hear people that I do know that are in our circle that were having problems with FTX. So very interesting stuff. The fact that we're seeing pressure on FTX right now is, again, very intriguing, because we saw this with Coinbase, we saw this with Voyager, we saw this with some other exchanges last year when we were at all-time highs. Right now, we're in a very unique position. Again, this only opens up the potential opportunity for these traditional banks, is if they can show security, consistency, insurance, and other types of value propositions that the traditional exchanges are not providing, along with consistency. You got a play that really could go after the heart of where crypto is really being built. Now, in light of that, then you've got Celsius over here. CEO Alex Mashinsky held a revival plan meeting. This came out of the New York Times. And essentially, this is exactly the point I'm making, is that these kinds of actors are exactly why we're seeing the traditional institutional finance guys say there is a lot of cherries on the tree and they're easy picking because this is our competition. We can take these guys down. And I think this is being looked at in a way that the traditional crypto markets right now had better get on the defensive if they plan on fending off a massive run into traditional securities exchanges, and especially around the institutional side of things, because the amount of money that's going to be coming in from those exchanges going to be significant. We're going to start to see even consumer and retail move their way over there, much like what we have seen around. Now, obviously, Robinhood, of course, is moving in that direction. I still think Robinhood's going to be a target for an acquisition at some point down the road. I mean, you just see how these guys move in packs like this. So definitely, we'll take some questions in over on the side. Let me jump over here to the charts and let me run up quickly. So here is Bitcoin, of course, quickly running down from that high, which was right there at 22.5, bounced off. If you're in our mastermind group, we've been calling this for a couple of days, is that we were likely to see a bounce off the top and be on the way down. Sentiment was a little bit up slightly yesterday, but it wasn't necessarily moving in any major positions, meaning we didn't anticipate anything major, if anything sideways, and everybody was kind of waiting for what we saw in terms of the CPI numbers and the core CPI. Ethereum, same kind of scenario. I think again, this goes back to my point, is that macro pressures are everything. They are what is driving the market right now. And even Ethereum, what is 2 days out before a merge, could not sustain this run. Just to look at this, where it came from right here on September 7th, up to that high right there. That was a 17% move essentially in 4 days. And it pretty much held within that range, dropping down to a 15% move right here until the 13th, coming in at 6 days out. So even, I mean, we were so close of being able to get that quick move here. This could be a little bit of a fake out bottom, but I just feel that we are seeing some macro pressures that the market is just not necessarily ready for. Same thing has been happening with other altcoins. Obviously, you see XRP falling quickly. Solana, after a big run up here to 35, 38, had a nice, if you're interested in buying Solana right now, 33, I think 31 is probably going to be our next resistance, right around, yeah, $30.85, probably our next resistance. We're really looking forward to seeing the sentiment data tomorrow. We drop on Wednesday for that to take a look at where the markets will settle in. This will give us a lot of indicators of where this is going for sure. Avalanche, same kind of thing, dropping. Of course, Cardano had been already dipping down and then took a big jump. Polkadot was a sideways and then just to fall off. Obviously, Matic was kind of the same way, except Matic was really on a run and then just got corrected again because of these market caps or these market corrections with CPI. And again, core sentiment is always important because it does give us indicators around what is happening within the financial side of things. And of course, right now, I think pricing is still a big pressure. And I do believe that we're going to see continued push from Chair Powell on the FOMC. This tells me, and these were the things we were watching for. Remember, we needed a positive CPI, meaning the sense of that prices were starting to reflect adjustment. They did not. We needed a positive from a good ETH merge, just to fend off the potential of any kind of major cataclysmic issue in crypto. And then we have to deal with the backside of the merge and what that may affect, along with the FOMC meeting coming up in 2 weeks. So FOMC is going to be another one. I think most of the FOMC will be priced in by the time that we get to it, because I feel like we're going to start seeing a bottom out here and see Bitcoin come back in to that 20K to 19K position, and possibly another leg down, maybe back down to where we had saw it run here back in early September on the 6th, where it run down to 18.8. So a lot of that. And again, if you're watching our breakdowns with Gareth Soloway, Gareth and I are still punching in around 14 as our low. For me, 14.13 is my window. Gareth is looking at that 10 to 12 window. So there's a lot happening out there for sure. Let's jump over to the polls and then we'll take some questions. Let's see what you guys have. Okay. Would you jump onto a bank-backed crypto exchange for crypto trading? Yes, I want safe exchanges. Wow, maybe it depends on several factors. Okay, so what would those be? Would it just be like a DeFi wallet? No, they're the enemy. Woo, split right here, guys. This is up for grabs. this is good for exchanges that are out there right now if they can kind of create that sensitivity. You know what? I think Robinhood might be a very interesting place in about a year. Very interesting place because they have the market essence of the new investor. They have the securities aspect, and by then they will have the DeFi wallet. So I think SBF might be, he has a percentage of Robinhood right now. That would be a good play for FTX for sure. Let's get over to some questions here. All right, Harley coming in, Bitcoin headed for 12K. As you guys know, I talk about this often. I still think we are in some pain points. We will see some more down before things start moving up. I think there's going to be some buying opportunities. You hear me say this all the time. But there's also some great selling opportunities. I sold some Bitcoin yesterday. I know many people that were selling Bitcoin over the last couple of days because it was a nice little run, and many had purchased in the 17K, 18K, 19K bundles. So those are great opportunities. Solely waiting on Fidelity, that would simplify things. I think a lot of new investors overall. I do an investment class here in our local community, and I coach a lot of high net worth individuals, and that's usually the one barrier is the entry into an exchange they know nothing about. Binance is the one that has caused the most problem with those high value investors just because of the onboarding. Getting a little bit better with Binance, so thanks CZ. But the ones that we use mostly are Coinbase, FTX, Binance, the top three, even though some of the more aggressive investors will start looking at, derivatives trades and et cetera like that because they're used to, doing some more advanced trading. This is going to be interesting. Could be a big one for sure. XRP lawsuit will have a settlement by December 5th or a straight win by March 23rd. I know that Jeremy Hogan tweeted out today that they are doing a situation with the judgment summary briefs that had to be due this week. So there's some stuff happening there, and also in the library case too. Both those cases going to be very critical for sure. All right, Chris is coming in saying banks have never been able to appeal to young investors like Robinhood has. UI will look like outdated trash as always. Yes, but here's the thing with UI is that do you prefer UI, user interface, over security and ease of access and safety? That'll be the big question for new crypto investors. And guess what? We've given them the poster child of volatility, trustless entities out there in Voyager and Celsius, and a ridiculous, baseline of frivolous investments through 3 Arrows Capital. So I'd look at that and kind of wonder, wait a minute, Fidelity and my banks or other entities that I've used over the years are doing this now. Why not go with them? This could be a problem for the major crypto platforms for sure. Colorado crypto chick coming in. Aren't folks moving their ETH into Bitcoin after the merge? I thought that was the pump yesterday. Some people were saying that was, it was 22.5, so it was a nice little run. But I think a lot of people had looked to the 25K. I don't know that many people are jumping Bitcoin into ETH after the merge. I will say that we will see a lot of volatility and movement. We just had Sue Ennis on today. Go back and check that video. She was talking a lot about what she thinks going forward, that Bitcoin is going to have some very interesting plays ahead of it for sure. Let's see here. Paintball for Life. Adoption is coming. Yes, 2025. Well, that would be the next happening. Remember, we're like a year and 200 days, I think, 1 year and 200 days away, if I remember correctly, from the happening, which will be a part of that. But I think really, guys, the big factor here is getting Europe out of trouble, getting Russia out of Ukraine, recorrecting the inflationary scenario here in the U.S., and starting its upswing. All of that could happen in the next 6 to 12 months. In that period of time, there's going to be a lot of trades to be made, but more importantly, there's going to be a bottom. And the bottom is what I'm watching very, very closely because that is when millionaires are made right there. Michael coming in, banks have been screwing people way too long. We don't need a bank to run a crypto exchange. Michael, I have a feeling that this is going to happen. It's going to happen, and it's going to bring in a lot of people into crypto. Remember, I mean, think about the impact on Bitcoin and Ethereum if another 100 million investors come into the market. We're at 300 million now. Another 100 million investors come into the market in the next year to 2 years. Then another 200 million or 300 million by, say, 2027. And by 2030, we're at that, beautiful epicenter of 1 billion users. That, I think, can only occur if, unfortunately, traditional finance is getting into this space in a big way. So, for sure. Hey, Con, thoughts on Render? So Render is a token I hold. It's one I've bought, sold. I made some great profits on Render. I do like it. I like the potential of what Render can do now with all the ETH GPU power that's coming at it and lower cost on GPUs. I think this is going to be a good thing for Render. Think about that long-term hold. Remember, we're looking for tokens that are going to be the next bull run, because I've talked about this before. Don't think your Avalanches, Solanas, and Cardanos, etc., are going to be the next bull run wonder kids. They're going to be a lot of tokens that were in the middle or the last part of their release of tech. Maybe they missed that last bull run. Things like Audius, if they go in that direction, gaming tokens, the metaverse tokens will play into it, and then projects like Render, Arweave, etc., that they had a little bit of play. I think they're going to see a lot more. And then I think we're up for a lot of altcoins and a lot of projects that have yet to be done so far. And they're coming because, especially around the ESG movement for the ETH ecosystem, big news there. Also, Binance could be their ecosystem, BSC chain, going to be one to watch as well. Delta 9. If we get a full percentage rate increase next week, does that give us our low for that? Would do it. But if we get a full point, the markets would just implode. I think 75 is probably a pretty hard hit. 50 was a lot of indicators prior to today. A lot of people were still thinking 50 basis points could have done it, but I think we're gonna see the 75. I think it's coming in. Jen Smith, definitely pain equals opportunity. I say it all the time, is that when it bleeds, that's when you lead. You get in, lead into the market, because that's an opportunity to get in at these close to bottoms. And listen, if you buy at 17, 18, and then it goes to 12, you're still under considerable amount, and the likelihood is you're a long-term holder in the essence. When I say long-term, maybe the next 12 months, the next 2 years. That's really what we're talking about now in terms of the crypto cycle, for sure. John Smith coming in saying banks should get in on Ethereum. I think this will be a play on Ethereum. I do think we will see Ethereum flip Bitcoin at some point. And it will most likely become because of the institutions. And here's the reason why, is that when you look at the ESG positioning, that Ethereum, now there's two plays that could happen here. The environmental sustainable governance, ESG, position that ETH is going into with true proof of stake. Changing the consensus to that will reduce 99% of the emissions. It's going to make it a clean token. That itself is going to be good for regulatory and good for lawmakers. At the same time, centralization may start to be a thing with Ethereum, and that's bad if you are deemed a security. So there's a couple of plays that could go into this, but all, of course, the institutions are going to be looking at that opportunity, and I think this is going to be one to watch very, very closely, and that's Ethereum. Parsa coming in, how could banks get to list crypto? There's no regulations. Yeah, well, this is getting ready to do something like this. Of course, this is a scenario where they created a separate entity in itself, so they can still do it and fund it. It's not about them launching a live one. It's about them getting behind one. They're not getting behind FTX. They're not getting behind Crypto.com. They're getting behind this new entity, which is a joint venture with many of these institutions. So something to watch very closely, guys. This is how the game is played in these early market developments. It is a very interesting time right now, because anytime a new technology takes over, like what we've seen with blockchain, there are a lot of players in the game, and the sharks are out for sure, and you really have to watch the chess moves, because this is something that could really make a difference in how you, and really this is the first time that we've had a chance. We have had a chance to get into the fray. And I think that is something that is so unique about crypto and the future of blockchain technology. All right, so if you guys are listening on the podcast, make sure and tune over here to the YouTube channel. This is the place where we catch it all. You're going to get a chance to see the charts, see our breakdowns, do our deep dives with us, our interviews. Everything happens over here. Of course, you have to jump into the Diamond Circle. It's the best way to stay connected. It's also where we drop a few more nuggets in there that we don't do here on the show, so it's easy and it's also free. So jump into that. It's very simple. Just click the link below. Of course, if you want to reach me, it is out there on Twitter at Paul Barron. We'll catch you next time right here on TechPath.